All right, let's dive in. We are opening up the books on the real estate brokerage industry, and you're going to want to see this. The latest numbers are out, and they paint a picture of more than just survival. We're talking about a major comeback.
It's the question that's been on everyone's mind. After a really tough few years, are real estate brokerages finally getting their house in order? Well, the data's in, and it gives us a pretty clear answer.
And that answer is a resounding yes. The latest performance data tells one big story. Operating profitability is on the rise, and it's being driven by a whole new wave of cost discipline across the industry. So let's break down the numbers that prove it.
First things first, let's zoom out and look at the bigger picture, because this isn't just about one good month. We're looking at a 4-year pattern of improvement that shows a real fundamental shift is happening.
This timeline really tells the whole story, doesn't it? I mean, look at where things were in October 2022. The industry was actually in the red, losing money with a negative EBITDA margin. But then, just watch that climb. Back into the black in 2023 and then rising steadily year after year. This isn't some random spike. It's methodical growth, and that's what makes it so powerful. And that's the real key here. This isn't just a lucky bounce. A consistent climb like this points to something much more deliberate, a structural shift in how brokerages are managing their money. It feels like the industry is building a much more sustainable, financially sound foundation for itself.
But here's where it gets really interesting. This recovery isn't lifting all boats equally. When you dig into the numbers, you start to see a clear performance gap. So who's actually leading the charge?
This lays it out perfectly. It's like we're watching a two-speed industry. On one hand, you have the firms that were already profitable, and they're hitting the accelerator, growing their EBITDA by a full percentage point. But on the other hand, even the unprofitable companies are showing progress. Their losses aren't nearly as bad as they were, which tells us they're finally getting a handle on their spending. And this quote from the source material just hits the nail on the head. It perfectly captures what's going on. There's a clear message spreading: spend smarter or get left behind. Financial discipline isn't just a nice to have anymore, it's the price of admission. So if cost control is one half of the story, what's the other half? Efficiency. A huge piece of this financial turnaround is happening at the agent level. This is the real engine driving that new profitability. Just look at this number for a second. An 85% year-over-year increase in EBITDA per agent. That is a massive, massive jump in efficiency. So the question is, how on earth did they pull that off? Well, you don't get a jump like that by accident. It's the result of a few really smart, deliberate moves. Brokerages are tightening up their rosters. They're cutting underperformers. And in doing so, they're also slashing all the unnecessary costs that were tied directly to those agents. This is such a great example of addition by subtraction. When you remove a non-producing agent, you're not just making your average income per agent look better on a spreadsheet. You are literally removing direct costs from your books, which gives an immediate and powerful boost straight to the bottom line. Okay, so with all this positive momentum, it is super important to put these trends into the right context. Because, as we all know, real estate has its seasons. The calendar matters a lot.
And that, of course, brings us to seasonality. Every single year in real estate, earnings take a totally predictable dip as we head into those slower winter months. It's just a natural part of the business cycle.
Now, earnings always drop from their summer peak. That part is normal. But what's really encouraging is the difference this year. The slope of that decline is much, much gentler than it has been. That's a huge sign. It means the industry is heading into its slow season from a position of much greater strength and resilience. So when you tie all these different threads together, the steady profit growth, the intense focus on efficiency, and the new resilience against seasonal dips, the big picture becomes crystal clear. We're looking at a healthier, more mature industry where disciplined financial management is becoming the new standard operating procedure. And this final quote from the report really just ties a bow on the whole thing. All that hard work, creating leaner operations, managing expenses, it's not just theory anymore. The data proves it is absolutely paying off. And this leaves us with a really critical question for the future. If smart financial discipline is now the baseline, just the price of entry to the game, what comes next? What's going to be the real competitive advantage that separates the leaders from the rest of the pack? Something to think about.